Hello and welcome to Almus Market Mornings, folks. This is Shikhar Garg, your host, and bringing in for you the global financial updates. A simple question to begin, majorly posed by many market participants, whether central bankers are acting in tandem or they've awoken in sync for the rising inflation. UK Central Bank gave its fifth consecutive rate hike yesterday and sounded focused on more in the upcoming meetings, despite economy being in a slump. Swiss National Bank, as we see, surprised the markets by doing the first rate hike of 50 basis point, bringing in the rates to minus 0.25% yesterday. But is rate hike the only action by them? Oh no. SNB thinks otherwise, and that brings to an interesting turn of events. The central bank holding of equities. To keep their currency strong, SNB says they might sell equity holdings. SNB holds USD 177 billion of tech stocks, which they are willing to sacrifice. Now, this led to a rally in CHF by 3% against USD, while even sterling, or as we know, GBP, after an initial fall to 1.2050, rallied more than 2% to hit an almost high of 1.24. Even euro, which was unsuccessful, tried to break its pandemic low of 1.0350, rallied 2% as well. These currency moves actually were overdue, and not only the dollar has been overbought for long, but markets had actually been ignoring the rising yields in other countries. Markets now seem to be convinced that central banks are clearly sacrificing growth to meet their prime mandate of addressing the inflation, as the rally in stocks post-Fed meeting on Wednesday was more than reversed yesterday. Global equities went into a tailspin led by the US markets, where all the indices fell by approx 3%. Now, of all these actions, there's only one central bank which is yet to act along, and that is BOJ. They're a meeting today, and looks like they're still bent on the YCC. This full week market is trying to break a 0.25% cap and many time traded over cap. Once BOJ moves out, there would be a significant jump in yield curve in Japan. Whether that would be today, let's watch it, and we will update you on those fronts as well. There is surprisingly one central bank which has raised the rates by 300 basis points to 52%, and it's nothing but to deal with the inflation at the first sign, or else be a ghost. Now that's Argentina for you guys. On the domestic front, rupee's reaction to DXY moves even in the offshore market was quite muted. Keeping it relatively weak was the softness in EM currencies, soaring risk sentiment and the oil prices staying elevated after a brief correction. Asian currencies have not had much impact on the overnight move in majors. So preliminary, we expect recent strength in INR against Euro, GBP, and JPY to be reversed as carry trades unwind. But we expect RBI to continue their present policy of containing the imported inflation through currency. The preliminary data on the domestic front was also of a 48% jump in the first installment of advanced tax in FY23. Now, this is majorly on the fundamental front, but we also have Nikunj today with us, who will share, as usual, the crisper levels to act in the currency markets. So, Nikunj, over to you.
Yeah, thanks, Shikhar. So good morning all. Welcome to the graphical representation of financial markets known as technical analysis. So keeping all things aside, like fundamentals, I'll just go through the technicals, wherein we'll see what points are important for us to act, whether it's import or export. So starting with dollar index has been moving with the wild swings, and day before yesterday it went up as high as 105.78, and right now it is trading at 104.20. Though we have seen a good dip in dollar index, at the same time we are seeing that this is not a kind of a trend reversal. It is just a small dip, and possibly we will move again higher. So as far as dollar index is remaining above 101, the possibility of it bouncing again is high. So any close below 101 or 100, we may see that this is a kind of a correction in dollar, and we'll see that it getting reflected in dollar rupee too. Now coming to our mother currency, dollar rupee. Right now, the NDF it's quoting at 78.0203. As far as imports are concerned, we believe that 77.70, 77.60 is a good level to act as far as near-term imports are concerned. Exporters can wait for 78.15, 78.20 levels. But only looking at technicals, dollar rupee still looks that it may head higher, maybe towards 78.50, 79 levels. But on the lower side, only if it is closing below 77.50, we may see some downside. Otherwise, a good bounce is expected. Euro dollar, yesterday we saw a good bounce right now at 1.05330. But we still feel that 1.0550 is a good resistance. Possibly we'll see some selling over there. And on the lower side, a medium term target can be 1.01. So as far as it is holding 1.06 on the higher side, possibility of again going down is high likely. Same with GBP. 1.2450 is a good resistance level. So if at all it comes there, exporters can look to hedge there for 1.20, 1.1950. Yeah, so that is what from my side.
Okay, wonderful, Nikunj. That was quite relevant for us to act on. We definitely look out for these levels. Meanwhile, folks, as we are seeing, all the central banks are into action. The whole of market is seeing a lot of volatility now as compared to the one which we have seen in the previous weeks. So it's better we stay put and keep managing the risk. As of now, I'd like to close by saying, thank God it's Friday and we have a weekend coming up. So have a good weekend. We'll catch up again on Monday. Thank you.